The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Of course, I wasn't here yesterday, neither were you. Hope everyone had a really good 4th. And hopefully the conflagration between different factions in your family were minimized by the good food. Let's go to the nitty-gritties here. ESU 18, what happened here? Okay, there we go. Just as I came on air, I hit a little button. There it is. This is a really interesting market. And if you look at the market itself, the bifurcation, that is the weakness that we're seeing in some sectors that were leaders, and the strength that we're seeing in some sectors that were quite weak going into the end of June. This bifurcation is basically what we're seeing in lives, in our politics, in the geopolitical scenario. So we should not be surprised about what's going on. So with that out the way, let me go through this quickly. I'm going to run the numbers. I'll do it here. The E-mini is up 21. This is a lot. I mean, earlier on, the E-mini was up from yesterday, because yesterday overseas, the markets were up a little bit. Then it followed through this morning. And then there was a sudden sell-off this morning, so that the Dow basically was up in the 100 and something area. Then all of a sudden it's up 58. Now it's up 188. This is really important. I'll explain why. The cluster formation that we're looking at right here in the left side chart in the Dow is suggesting that 9 period, well, sorry, let's go to jump a little ahead. Let's go to the 14 period, moving at the black line. The pink line is the 9. This is the 14 that I'm looking at, has been ever since about the 18th, 19th of June. It's been a repellent zone. And you would anticipate that after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, this is the 11th session. After 10 sessions, this 11th session would, for goodness sake, try to close at least once above the 9-period moving average. We're right there at 27.33 in the E-mini. The MACD is turning up, but it hasn't even shown any real sign of positive directional move, except if you look closer, you'll see the histogram, the little vertical red lines are getting smaller, meaning the distance between these two moving averages are getting closer. The stochastic has finally got out of that horrible under the 20% range, and it's at 28%. It's really not good, but it's not bad. I shouldn't say it's not bad. It's not good. That's all. It is improving, and that's important. Now, in the Chapman wave methodology, that peak A that was made in the E-mini, I want to use this now because it trades so many hours a day that it's really a nice benchmark. That the repellent from the 29th, where it went just above the 14-period moving average to 27.4550, and then failed, was a peak A. Then you had a pullback, but it held the low of 2693.25 from the day before, and it ran from, let me give you the date, from the 28th of June. It pulled back to just under 2,700, then had a spike the following day above the 14-period moving average, couldn't hold close at the low. Tuesday, it tried to rally. It wasn't a bad rally, but it wasn't a very good rally. Today's a very nice follow-through rally. Haven't taken out the low of Tuesday. So far, all the signs are pointing, if you're looking at this chart here, 12 o'clock sneeze, huh? That's very interesting. All right, excuse me. If you're looking at this chart here, you'll see there's a declining trend line in the 120-minute chart from 27.48 and 27.45. That was peak D, then a peak C minus, then it pulls back. It has an inside peak A, B, C, D to 27.41.50. Trend line holds. the 200-period exponential moving average. The orange line is the repellent zone. This morning, we run up to the 200-period moving average. It gets repelled. We pull back, and now we're having another run at 27.33, 27.37 to 27.41. That today is the absolute imperative to close above. It mustn't be tomorrow. It's got to be today. If it's today, that suggests that we could have a rally right into early next week. This is the way I'm looking at it, unless it's some bad news. On the other hand, the fact that we've been repelled so many times is that if there is a turn down by tomorrow without taking out 27.41, if there is a turn down, another one, and all of a sudden we're trading at 27.27, 27.23, then 27.20, and then we take out 27.17 support, that's going to suggest that there's a real problem. And that real problem will be to see the sectors like the Dow, the S&P, the New York Stock Exchange that have been very weak but have been attempting some kind of a rally here, not necessarily successful, are going to become a drag on the market, and that could pull back any of the sectors that were failing, trying to rally here. We'll see about that. Let me run the numbers really quickly here because there's a lot I want to show you. INDU, Dow it was only up 50 something after a really good start and was up 140, I think it was. Then it comes back down to plus 50, plus 60. Now we're up at plus 167 at 24,342. The actual Dow chart doesn't look quite as positive as the E-mini chart. This shows 2440. And what I said to subscribers to my opening call, remember, we're short from almost the top where that peak D was made. And we're still holding that position. We have taken some profits, much lighter profits. Much lighter position we've taken off from the Dow short than we have, say, from some of the others. But at the same time, we are still short. And we're looking at here is 24,460 is really that's the resistance to take out in the Dow. Otherwise, it's just stalling. It's really using up time more than price. Same thing in the weekly chart. There are all indications, at least for 6 sessions, that every session should have been a really good, strong update that held. Has not happened. And that's going to be that's tough. So those are the parameters to watch. Under 20, it's at 24,343. Under 24,250 at this particular point will be very negative. Over 24,440 says, hey, nice, we can rally a little further into next week. S&P, let me just get this done. S&P right now is up 18. It is closer to the 9-period moving average right here. It's got a little bit of a better chart formation. Trough A, trough B, trough C. It's trying to rally off that. Very important that it gets to 27.43. It's at 27.31 right now. Should do that within the next couple of days. I mean, it needs to do that within the next couple of days. It doesn't have to. I mean, it needs it, but whether it does or not, very important. I'm not sure now we can pull back. I don't know what the news would be if we pull back. Any move below 27.22 says, uh-oh, be real careful. QQQ, NDX 100 rallying up 1.69, up 0.99% at 172.49, one of the bigger percentage movers. This still hasn't taken out. I think it needs to get to 173.62, and that'll be a 62. Oh, 0.62. Yes, that'll be at least a little bit positive. I'll be back. I don't want to rush through this. It's just the beginning of my session. We'll take.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's just complete this. The Dow is up 172, S&P is up 19. One is up 0.70%, the other one's 0.73%, and the NDX, the 100, the QQQ Power Shares Trust Series, is up $1.86 at 172.66, up 1.09%. Now this basically is gray leg B, and now it'll make a peak B if there's no push today above, right there, above 173.45. As it stands right now, there's this big gap from the 22nd. We closed at 170. The low was 174.69. Next day, the gap down is 173.99. That's what, 50 cents-ish? It needs to get there. It needs to fill that. It held the 9-period moving average in the weekly chart. It closed above it. It walked the 14-period, this black line right here. This is nice action in the weekly chart, but the MACD is really close to turning, crossing negative. And the stochastic is still very good at 86%. This week, the close tomorrow, Friday, is going to be quite important. And as it says right now, the cluster formation here just says very decisively, if the NDX 100, the QQQ trading vehicle, is trading at any point in the next 3 sessions, Thursday, including today, Thursday, Friday, Monday, by Monday afternoon, if it's trading anywhere in the 174.20 area, or higher, that's saying, you know what, don't ignore that weekly chart. We'll do one thing at a time. So, and the 120-minute chart really shows you, hey, it just keeps bouncing and it's being repelled. It's having a really tough time. Nothing to see here, folks, in the QQQ, but there will be if it can get to the high 173s. I'd have to look at it closer. IWM, now this is going to be very important. The small caps that led the market for a couple of years now to the upside has been struggling, hasn't broken down. It hit at 170.20 all-time high on the 20th of June. it pulls back to, I say pulls back because 162.26, 8 points, 8 points, not a big deal. It's in leg B right now. It's survived the arch formation, hasn't come down deeper than the 50-period exponential moving average. It's holding pretty darn well. Weekly chart is holding well. Not a great candle, although it's green, based on where it should be with the number of buying opportunities over the last few days that have failed. So I'm saying that if the IWM trades at 165.64, if it can get into the 166, let's make it 166.80s by Tuesday of next week, Monday afternoon, Tuesday. I'm going to just have to say, you know what? Very good action. Even though for my subscribers to my opening call, we are short. We've been short since the exact high. That just gives us comfort. It doesn't mean that it has to plunge. It just means, hey, that was a really good trade. Will it be a position play? We'll see. We're trying to hold it as a position. It's gone to leg D in the 120-minute chart with the technicals quite good. So parameters to watch, IWM support at 160. It's 165.62 right now. So support at 164.20, very short term. It's really, if it gets into the 163s by Tuesday of next week, not good action at all. On the daily. The weekly chart has a long way to go because 161.88 is the 9-period moving average and is well above there. Now, this is going to be very important. Look, gold. Gold right now is up a little bit. It's up let's call it $5 at $12.58. The move from 1238.80 to over today to I've got to get used to the holiday. Tuesday hit the 9-period moving average, the pink line, and then it pulled back a little bit. Now it's testing that once again, but it has spiked above it so far today. I have something to say, and it'll be a bit of a surprise to some of you. It was a surprise to me. Not that I wasn't thinking it was a possibility, but I just had to go over this and over this and over this. When I have my free time, I tend to spend it studying charts of importance. I spend a lot of time on the dollar. And the dollar, so I'm going to take a little time now. I got questions lined up. I understand that. I need to clarify this. I need to talk it out loud because this is a position now. It's not like I'm just making statements. I'm not saying the dollar could go to 103.53 and then not be able to back it up with the facts. The facts are that everything about since the 90.07 buy on the 6th of April, everything about it said that the weekly chart was improving. Eventually, the weekly chart made a peak D. That was when it made a move of 95.53, the high of the 22nd of May that week. The high of the 29th, of June. The 29th of June was 95.53, a parallel high, exact high. And now we've had a pullback. But the more I studied this, and I went through this, I believe it was either Monday or Tuesday, I said, you know what? I'm going to put this in. I think it was Monday. I said, I'm putting this in here. I know some of you will be surprised because you know that this is usually related to the pattern that I talk about, the Chapman wave stalk leg formation. Ha. I also use it periodically, and some of you have seen it and recognize it. I look at it and I say, there is an opportunity here to break out. But the arch formation, even though I've drawn in an oval, and it's a perfect oval, suggests that if there's a break to the upside, it could become a Chapman wave stalk leg formation, the leg, the oval body, the neck, and then the beak comes down. But it also signifies that if you're looking at the technicals, and the technicals are weak, that I could take this away and just draw in an arch formation. But because I had on a very strict Chapman wave count, a peak C, I said, I'm going to hold off, but I'm going to draw for you the pattern that makes this. And in the den, they're talking about the hot dog contest. Does this look like a hot dog right here? Anyway, I call it the oval formation. I put this in here for a specific reason, because it fitted the pattern perfectly of the oval. It said that if there was a significant push above the 95.53 level, I could consider that that would be going to another leg D. The more I studied the chart over the last couple of days, the more I said, you know what? I'm going to take this double top at 95.30 on the 19th of June, 95.30 on the 20th of June, and I'm going to call that, the Chapman Wave Phantom Peak. What does that mean? Every once in a while, I learned this the hard way. Every once in a while, there's a double top, two bars, parallel bars, that have all the indications. If you look at, say, a smaller time frame, they have all the indications that it should have been a peak, but it just managed to parallel high. And you might need it because in the Chapman Wave methodology, you want to get to a D as quickly as possible. No, you want to get the count to D, because you don't want to make a mistake by thinking a peak C is actually a peak C is a peak C when in fact there's a chance for an alternate count D, and then that peak C drops significantly. You say, oh man, I knew it was an alternate count. So to make it short, the top on the 21st of June at 95.53, I've called peak D. Now,
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So there are a couple of things. I just wanted to finish up here with the dollar. Why? Because I'm going to go back to the euro. I'm going to go back and show the euro. I'm going to show the gold again, and I'll explain what I'm looking at. That was the count that I made here at the peak D was because there was a mini double top just before that. That to me is the classic way that I've looked at the, once in a while I'll use this when I'm trading the futures, because futures can do, they don't trade in penny or .01. They trade in 10 cents or 25 cents. So that's a little different. So that's where I learned to use the phantom peak. But I could have done something else. I wanted to actually have it as a D right now. Normally what I would do is I would go to this particular bar right here at 95.53, and I'd say sharp pullback, V-shaped formation. Hey, wait a minute. If I go from this bar right here, remember, I like to make these lessons. I don't want to just say we're going up, we're going down. I like to explain the thinking within the Chapman wave. That's what I've been about all these years. When we go to the double top of the 95.53, look, the MACD deflected immediately lower. It was, in fact, lower altogether. The stochastic was much lower and failing. So technically, I could have said, you know what? This is just very simple. I'm going to make it a peak. This is a regular peak C right here. And this was a message that I got. And thank you for that. I was going to leave it out because it became a little bit too complicated and too long. But since you mentioned it, I'm going to do that. Basically, what we'd be looking at right here, let's forget that D, is a peak C1 in the Chapman wave right here, C1, and an exact double top peak C2 right here. Remember, that's the whole reason how it came about, these peak C1s and C2. I would have put a plus there. To me, either one's good. I just like the one with the phantom peak C, because then you get to the D. I can just make it quite simple and talk about peak Ds all the time. I'm going to keep this. I'm going to make it very faint because it was brought up by one of our tigers who has gone through all the Chapman wave methodology. So I'm going to put it in there because you're absolutely correct. I didn't put it in myself because I just wanted to make it, I thought, as simple as possible. I don't know if that's going to be simple, but we've got a peak D in the dollar. And two things. In this particular formation, if we start a leg down below the key oval low, in this case right here, 94.17, which I think we're going to do, that's going to suggest that the down arrow, that's the reason why I wanted a down arrow rather than a plus sign, which I would have made red right there. I wanted to have a peak D because I wanted a down arrow because I have said to subscribers, the dollar daily is now in a sell mode. MACD is lousy, stochastics at 53%, prices failed. I think it's going to take out the left side low, but the weekly chart remains in a bull mode. It is in a buy mode. It's holding really well. Cool, got that out the way. Now let's go back to gold and I'll explain something, the way I'm looking at it. Gold right now is up, as I say, it was up 5.3. Now it's up a little bit more. What's really important about this is that I only see this as a bounce, and it is a comparable bounce that I'm looking at that should have a comparable pullback in the daily, where the weekly looks like it's just about to go to a sell signal, and the weekly chart of gold looks like it's just about to go to maybe, possibly, just nearly a buy mode, because the daily is acting pretty well and it doesn't get there. That's what I'm thinking. Counter trend rally in gold, pullback, digestive phase in the dollar, the weekly charts, in a monthly charts in a huge leg A. It needs to pull back. Okay, and that's all I'm looking at. And we'll look at the euro. Look, EUR USD. Euro right now is at 1.1694. It's up 0.03. Real good chance that it's going to take out that left side high, confirm a leg B, a double leg B right here. And that's going to say, you know what? Euro can go to the 1.175 area. It could even try. Let's go one step at a time. One step at a time. So far, it looks like the euro should rally some. Dollar's going to pull back. Monthly chart of the euro and weekly charts are not very good at all. Let's do that. And now USD JPY. Wow, I've spent a long time on this. USD JPY is trading at 110.64. It's actually holding pretty darn well. It's gone to a leg C. Oh, it's gone to a leg D in the daily. D. And it's stuck in a range in the weekly chart. Yeah, the yen is looking quite good. it should hold at 110.64. It should hold 109.90 to 108.90 over the next week or two. If it does pop to 111.25, that'll be a divergence unusual. Okay, done that. High-grade copper was acting lousy earlier. Oh, lousy. Not good. I've got a down arrow now in the monthly chart. Down arrow in the monthly chart. High-grade copper says, whoa, world economies are not quite that strong. Let's look at wood, WOOD, just real quickly. WOOD. Wood is trading at this particular point at 77.94. Really struggling. I think wood, the iShares Global Timber and Forestry ETF, is in it's been in for a while a sell mode in the daily. It's in a sell mode in the weekly. Monthly chart has just barely budged to give you a peak E if there's no new high this month. Crude oil right now is down, down 96 cents. Have we made peak C? A, B, C, up a peak C. It should get to a D in the daily so far because they didn't go above Tuesday's high of 75.27. It's at 73.19 right now. Could pull back a little bit, then I think it'll have one pop to the upside. I think it's getting a little toppy, shorter term. And if I can go to the TLT, I will. TLT right now is trading at, it made a new, 122.50 was the high in the 29th. 122.53 is today's high. It's gone to a leg E, and that's suggesting that the that the yields, TNX, let's look at the TNX. Here we go, TNX. Yeah, 28.31. I think yields are going to go lower. I believe that the yield at some point will be testing the low of 27.59 made in the week of the 1st of June. But right now, chop. It's just trying to hold support. Let's see what happens there. GT says the 2 to 10-year yield spread at 0.29, narrowest since 07. Bank of America, XLF. Let's look at those. XLF right now. XLF. Trading up 06.6. Oh, man, 6 cents. Doesn't look good. Wow, this weekly chart has just been bouncing off that trend line, that downtrend line support. If the XLF at 26.55, tomorrow's Friday, I guess that's a little quick. Within the next week, Friday a week, if it's traded, doesn't have to close. If it's traded under 26.20, it's trying to get to the 26.20. That's kind of key on a short term. A close below that would say, you know what, not good at all, especially in that monthly chart. All right, I think I've done just about everything. Question about Boeing, of course, everybody wants to know about Boeing. There's the cup formation that's making the handle is just way too low. I suspect at 333.25, up 32 cents. Boeing will be testing the 322 to 319 area over the coming 2 to 3 weeks. That's what I'm thinking. I'll be right back. Dow's up 164, S&P's up 18. Basil Chapman, Tiger Technicians Hour. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's go back to what I was looking at here. So I got questions. IYT, of course, is a question. Did I do both? Yeah, I did both. IYT is the transportation index trading at 186.79. Lousy action. I mean, this is just lousy action. There's that peak C, kind of failure in the weekly chart. Monthly chart's got to be worried. At 186, if there's a trade intra-month, sometime in July, it doesn't have to be a close, just a close on a daily basis, not even a weekly basis. Any close in the 181 area. That's a long way to go. 5 points down, I don't know what's going to take it down. But if there is, that's going to hint that the monthly chart is starting to weaken. But so far, the monthly chart still looks very good, although the technicals have weakened, the price is held. I'm just watching this real closely. You can see this trend line. I'll be generous with it. It's just nicked it today, this week. Let's see what happens. It must hold 182 in the short term and try to get to the 191. That's real tough. Let's see how it goes. Next question is KNX, talking about transports. KNX is Swift something, wasn't it? Knight Swift. Transportation, holdings, trucking. It used to be Swift, and then I think Knight might have taken them over, something like that. I remember Swift. Trading a peak D in the monthly chart. It's in a leg A to the downside, under the 9-period moving average, under the 14-period moving average. MACD's negative, stochastics negative. Same in the weekly chart and the daily chart, 37.58. And what's the comment was? KNX on track for lowest close since August of 2017. Yeah, this is not a good sign. So let's go to the next question. Was HG? I did high grade copper. Did Boeing? I did XLI. Did I actually get to the XLI? I was going to redo the XLI. I think I forgot to. Yeah, I did it. Okay. XLI monthly peak. It looks just like the transportation index. So this is not so good. Kind of fading here. This is the select S&P Select Industrial Spider. Weekly chart's got a real problem. The daily chart is just trying to make some kind of a base. It's kind of not too good. So just be careful here with the XLI. Next question. So then I had a kind of a statement. I thought it was a good statement because it kind of covered what I was thinking And at the same time, yeah, this one gave some praise. We don't need praise right now. This is a tough market at this particular point. We need to see a breakdown to be convinced, and at any time, yes, there could be a bounce. So the question is, why aren't we down 300 points? And this was 7.5. Oh, that was this morning early. So here is how is the Dow not down $300? Did the bulls just give the bears the best head fake ever? Low volume holiday week means crazy turbulence. Most important, what's your downward Dow summit low target before final coda phase kicks into upside? I'm going to be doing that for subscribers over the weekend. I don't really want to do anything right now. I'm going to kind of generally discuss it at this particular point just to show you what I'm looking at technically, but the hard facts I'm going to try to give over the weekend, and there's a specific reason for that. I want the Friday close on the weekly chart. So what I'm looking at here, for instance, the Dow, it would be real easy for me to say, oh, 1 to 1 to the downside. Oh my God, we'll take it from 26,616 to 23,360. 300 points, 320. Let's just call it 3,000 points. So 3,000 points from the high of 25,800, just to be conservative. That's usually the way I do it. I take it from there to there, A to B. Now we've got a C to D. This is the lightning bolt pattern, not Chapman wave peaks or troughs. That means from 3,000, from 25,800 takes you to, oh my God, 22,300. Hey, wait a minute, 22,300. 22,300 is below the 23,344 low that was made on the retest in April of the January low of 23,360. No, I'm going to, let's have a little, this is not politics. Yeah, we can have some sanity. I'm looking at this and I'm saying, these are the numbers. This is the deflection that we got in the MACD last week, 2 weeks ago, that I was anticipating. It's come about. This can turn into a W formation in the MACD. Stochastic's still at 64%. Hey, it's down below 80%, but it's not breaking down. And the unbalanced volume has absolutely a waterfall cascade down to the low and a little bit up this week. So that says, oh, be careful, because sometimes unbalanced volume gives a nice buy signal. I have mixed signals. I do not have mixed signals in the actual Dow daily based on the technicals at this point and based on the horrible performance in an oval pattern right here. Let's do this to be a little kinder in the daily. So I have very specifics. I want to give it the benefit of the doubt. I need to see what happens by Friday afternoon, tomorrow afternoon. I have my suspicion, but that's not the issue. I am going to say I see a really good chance of the arch formation using up time as it goes to a lowercase m, the template that we've looked at in the weekly chart, and that there will be a test if this trend line support, the dash trend line support at this particular point, it's at 23,990, but I'm going to be a little generous with time, and I'm going to say by next week, let's make it 23,900. If there is a close next week below 23,900, I anticipate that you can be expecting some kind of a test of the mid-23,000s. That, to me, is imperative. What it also says is continue to think of the upside as extremely limited. Continue to think of the rotation going through the different sectors as using up time. And because there's a change in the dollar, we might see something that happens where some of the cyclicals really take it on the chin, on the chin. And a J&J, because the dollar's improving a little bit, look, there it is, having a nicer bounce. And that could mean it's a Dow stock. So that says, so it could be some amelioration of the downside pressure because a couple of multinationals, but it's still not all the way around. So hope that clears that up. 23,000, mid-23,000s has been my target for a long time. I've spoken about that. But to make it more definitive, I need to see the close tomorrow, and I need to see how the different sectors have acted. For instance, we are long a particular sector, which we haven't been long for a long time. Oh, I hear a cough. Ben in Tallahassee, I didn't hear you until I heard the cough. How are you?
Good, Basil. How are you?
I'm well, thank you. Question.
Yeah,
yes.
so the S&P 500, I believe we're on a weekly basis, we made a peak C, correct?
Correct, yes.
So this has bitten me more than once, that's for sure, where we have a nice fall in the daily. The weekly makes a peak C on the weekly, and then I established some great short positions.
And then suddenly...
And then the weekly comes back and haunts me. I was just curious, do you see any more bearishness in this weekly peak C versus previous ones? And then the last one is, if we do drop down to the mid 23,000s, would that keep the S&P in a weekly peak C?
Great questions. I'll answer them as soon as we get back. Ben has asked questions about the SPY. All questions that we can deal with as soon as we get back. A couple of parameters we can look at to make it very clear. I'll be back with Ben straight off this. Dow's dropping down. It's up to 107 of 17.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So let me just quickly check. Oh, a bunch of questions. All right, we'll deal with them tomorrow. So this is what we're looking at, Ben. Within the SPY, what's going to be really important is if the SPY, a week from tomorrow, I need to give it another week because of the weekly chart having a green candle so far this week. If the SPY has not taken out decisively the low that was made last week of 268.49, but instead has managed to rally to 274. Just fill in that gap. Let's go to 274.35. So it's about 2 points from here. I just did this in a day, a point and a half. So that shouldn't be a big problem. If this is now, as Kevin had asked about the 300 points, the fact that it isn't breaking out to the upside, the fact that it isn't also breaking down suggests churning and that there's a rotation going on. So let me make this real clear. Those are the shorter term parameters that if you see the S&P going into 274.50 level on a closing basis, on a weekly basis, you have to have the patience for the whole week. That's suggesting rotational correction, that there's still life left in some of these sectors, and that's kind of be important. And that would say to me that the 268 level, 269 to 268 is going to be really important support. And in the short to, how do I call this, the 2 week, 3 week period, that should be a base of support. If that breaks down and there's a close below 268 in the next week and a half, we're going into Friday a week, that's saying to me there is weakness. It's now rotating enough that it's affecting all the sectors, sometimes on the same day. And that's different to what we've seen. What we've seen before is that you can get, it used to be that the IWM was weak and that the semiconductors were strong. Now all of a sudden those real big winners are really struggling. Even the SMH today, which should be much higher, is trading at, it's up 2.37, but it hasn't even broken out. So I'm going to say to you, you've got your positions. I will clarify over the weekend how we can alleviate the risk. But I think you're okay for now.
All right. Thanks a lot, Basil.
Stay tuned. You've got Steve coming up. You've got Dave. You've got Tom O'Brien. I'll be back later in the day. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.